Shah Alam. The case began when the aunt of S. Binoy deceived a 62-years-old woman into believing that there was a fixed deposit promotion. The victim transferred 1.78 million Malaysia into the account of 5 Element Service, a company owned by Binoy. Binoy later transferred the funds to several others' individual accounts in an attempt to hide the origin of the money and make it appear legitimate. The Shah Alam Citizen Court subsequently sentenced Binoy to 3 years of imprisonment and imposed a fine of 1.14 million ringgit Malaysia.
Assalamualaikum. Hi, my name is Alia Syafiqah.
Hi, I am Siti Nobahya. Today we will discuss a money laundering case. The case is a former printing company owner charged with money laundering of RM 1.14 million. So how this case actually happened?
And how this case related to money laundering? Let me explain how case happened, and I will explain the money laundering process first, then I will connect it with this case. So we have 3 stages of money laundering. First, placement, second, layering, third, integration. For the placement stage, placement is the physical deposit of cash proceeds derived from illegal activities. In this case, on 8 February 2018, Binoy Auntie offered a fixed deposit investment at 4.38% to all women, and all women believe it and transfer the money into 5 Element Service bank account because she believed it was a legitimate fixed deposit. You know what? The money come from fraud section 420 and was formally placed into Hong Leong Islamic Bank using a company account to appear legitimate.
Step 2. Layering. Layering is the stage where illegal money is moved to distance it from the original source. On 12 February 2018, Binoy transferred money from 5 Element Service account to several individuals' service accounts. Transactions of 85,000 and 144,000 were split deliberately and involved multiple accounts to complicate tracing. This was done to conceal the link between the fraud victim and the stolen funds.
And finally, integration stage. Integration is the stage where illegal money is injected into the legitimate economy. After several transactions, the money appears as ordinary saving. At this stage, the money was no longer directly linked to the original fraud, and the accused could control and use it as if it was legally obtained. The offender could use the money without raising suspicion, allowing them to benefit from the proceeds of crime and completing the money laundering circle.
Hey Alia, you know what that Binoy was found guilty under section 424 of the Penal Code for hiding someone else's property. Because of that, he got 3 years in prison and a fine of RM 1.14 million. But that's not all. He also guilty under section 4 subsections 1 subsections B of the Anti-Money Laundering, Anti-Terrorism Financing and Proceeds of Unlawful Activities Act 2001.
Oh yeah, the aunt M. Manimala is found guilty under section 420 of the Penal Code for cheating the victim through a false investment promise. She is sentenced to 5 years imprisonment and fined 30,000 ringgit Malaysia.
But Alia, what do all these sections actually means?
Oh, it's simple. Section 4 subsection 1B of the Anti-Money Laundering Act 2001 is cover money laundering. It says that if someone transfer, use or hide money from illegal activity to make it look legal, they can be jailed up to 50 years or fined at least 5 times the illegal amount of 5 million ringgit Malaysia, whichever is higher. Section 424 of the Penal Code is about hiding someone else's property. If you move or hide property to cheat or break the law, you can be jailed up to 5 years and fined. And also, section 420 of the Penal Code is about cheating. If someone tricks another person to get their money or property, they can be punished.
Hey Alia, you know under section 14, bank must report suspicious transactions.
Oh yeah, Siti, how does the process work?
Step 1. Documentation. Record all transaction details and reason for suspicion with supporting documents. Step 2. Internal reporting. Send to the money laundering reporting officer who can forward to Bank Negara Malaysia. Step 3. Prepare suspicious transaction report. Include customer information, transaction details, reason and documents. Step 4. Submission to Bank Negara Malaysia. Submit the report via the Financial Intelligence and Enforcement Division system immediately. Step 5. Confidentiality. No tipping off. Never inform the customer. Keep everything secret. Step 6. Record keeping. Keep all documents and reports for at least 7 years for audits or investigations.
So Siti, we can see that this case is a clear example of how money laundering not only causes hard losses to the victim, but also threatens the integrity of our financial system.
Yes, that's true. This is why law like Anti-Money Laundering Act 2001 are very important.
Exactly. By complying with AMLA 2001 can help protect the financial system.
At the same time, these actions ensure that our financial system remains safe, transparent and free from criminal activities.
And this shows the importance of strong compliance in preventing money laundering.